JB here, August 5th, 2024. We have about 37 minutes to the open. Talk really quick about the markets, which are under some serious pressure here this morning. Some names I'm looking at and go from there, but pretty remarkable stuff here. It feels like we're in October of 1987, right? Black Friday, well, Black Monday, right? Is that what it, whatever they want to call it? But the Nikkei, Japan overnight had their own uh, Black Monday per se, closing down over 12%. Concerns over the fact that they had to raise rates. Their currency is under severe fluctuations. They have the yen, the carry trade, right? So supposedly you sell yen, buy U.S. stocks, but now that the yen is going up, you have to sell your stocks to cover back the carry trade. So that's supposedly causing some downward pressure in U.S. equities. They always like to bring up all these buzzwords when markets are falling to try and rationalize the move. But there's a lot of things going on, right? So you have Buffett over the weekend announcing a 50% cut in their Apple stakes. That was, raising a record amount of cash. I mean, he's had a huge performance in Apple. Then you have geopolitical concerns in regards to the Middle East. And then we have the follow through on the Friday jobs report, where everybody is starting to, and I said this on Friday, right after the jobs report came out, I said everybody's going to be starting to talk about the R word, right? Recession. And now when you had people who were saying, "Oh, Fed, don't rush into cutting rates," now they're saying, "Oh, you got to cut rates 0.75%." So we'll see how this all plays out. We're seeing moves this morning that we haven't seen since the COVID days. Gosh, I remember the COVID days. I mean, it's not that long ago, but when we used to have market halts intraday on some of the swings. I don't know if we'll get that today. I think this is more just, you start looking at some of the news and where we've been and where the market has rallied from. We're not even uh, at May lows, right? So that's 2.5 months ago. I'm not discounting the pullback we're having right now, but it kind of, I always talk about keeping things in perspective. So we'll see how today plays out. I'm not going to sit here and say I'm buying the dip. I mean, that has worked for a long, long time. We'll have to see where the market's. I was hoping 515, 516, but we're down here at 509 on SPY, so we'll have to watch how things play out at the open. Well under the 50-day moving average. You look at the lower Bollinger Band on the SPY. It's five. Is it 534? I have to pull up a new chart here, folks, because I can't even see it because the lines are being blocked here. Yeah, 534.06 is a lower Bollinger Band on the SPY. We're at 510 here in the pre-market. So I'm just, you do this long enough, we're going to see a snapback reversal. I don't know if it's going to be intraday today and end of day today, tomorrow morning. That's overnight. There's going to be some kind of snapback reversal. It's very rare to see the SPY trade substantially below that lower Bollinger Band. Anyway, so we'll see how things all play out. But at the same token, I'm not going to sit here and try and chase the dip or what have you. I use the mantra, and I did it on Friday as well. Is small becomes big in some of these markets that are volatile, and big can become small. So you don't want to play big in a market like this if you're trading options, right? That the reason you're doing the options, or at least the reason I do it, is for the leverage to be able to take a small position and turn it into a big one, right? A lot of folks, they see this and they see an opportunity, and it now like, oh, my bear case on XX stock, typically Tesla or some of these other names, is coming to fruition. I'm going to go all in on a put position, and then we're going to get some kind of crazy reversal. So rants for other days. Take a look at the small caps. I talked about this on Friday. The bull flag has been negated, and you start looking, and people are saying, well, the big move reversal. We had the CPI data that came out. That was the big move up for the small caps. They outperformed. Looked like that was going to be the beginning of it, and now you have the flip side, which is people are worried about an economic slowdown. Is this the start of not good stuff for the economy? If that's the case, then small caps are the ones that are going to suffer. They don't have as much cash on hand. They have debt. They rely on growth, where the value stocks and the big chips and Dow and all those names have tons of cash. They're well positioned to survive a slowdown. So that's some of the reason why maybe that's, hopefully the small caps can find some footing here, but that's probably some of the reason you're seeing that move. 50-day moving average 207. 43. We're at 199.35. So I'll be watching that today. So last end of the week was great. I wish I had added some more put hedges into this week. I was looking at Service Now. I got those puts. I closed them out for, I don't know, 1,500% on the 770s. The 800 strikes I closed out for 600%, and it only had a 2% implied move. It closed at 790. And here it is, a 745 in the pre-market. Tough one, right? I mean, it's almost 100% speculative trade to hold into the weekend, hoping for some kind of pullback like we're having right now. But some of pretty much the only somewhat hedged position I have right now is in regards to gold. So I have the Nugget puts and I have GLD puts, which expire next week. Well, the Nuggets expired. The September GLDs have plenty of time. Nuggets down here at 37.62. So my put's probably going to open up at least 150, 200% in the green. I may look to add J-Dust, dust calls, or GLL calls, and may look for some more GLD puts, because I still look at the longer term picture, and I think gold's heading to 2,300 bucks. I know I sound like a broken record, but when it does, the GLD puts will pay out, and you can take a look at the Nugget position. 41 and change is a 50-day moving average, so broke under that. So really like that one for downside. So a decent hedge there. And then some of these other names, and the unfortunate thing is when the market sells off, and it's indiscriminate. It doesn't matter if you have the best growth story, momentum name, what have you. All the names are going to take it on the chin. Fiverr was doing actually pretty well at the end of the day on Friday, closed up 2% despite the market weakness. Still like this one for upside. I'm not going to add anything just yet, but hopefully it holds 21.22 today. iRobot reports earnings. I think it's tomorrow after the close. Really like this one as well, but still plenty of strikes. 50-day moving average is it 9? I think it's 989. It's trading down here at 9 and 9. Well, it's tough to tell because illiquid market down here at 944. Hopefully it gets back over the 50-day like that into this coming week, but I'm not gonna add anything more. 1,200 plus companies report earnings this week, including Super Micro. Let's see, what are some of the other names that are reporting? Of course, I don't have it up here. But if I'm looking at names and I'm looking, I'm gonna not to say I'm gonna have a shopping list or bargain shopping list, but Dell is definitely one of those names that you look, it's trading in the 90s right now. And I talked about when I was bullish Dell back in the spring. I was bullish Dell not because I thought it would trade in lockstep with Nvidia or some of these other AI names. I thought it would outperform because it really hasn't performed the same that Nvidia has, and then it finally started to try and play catch up, and now you see it down here at 90 bucks. I mean, I and then there was Elon Musk this weekend. I talked about the servers and stuff in Texas. I just at some point I look for some Dell positions to play for upside, but tough to try and time a falling knife. But down here at 90 bucks, I mean, even if you get some calls here at the open and then it drops at 85, you get a couple more strikes that are lower. So don't be surprised if I get some Dell strikes. Look at Broadcom down here at 130. Oh, tough one. Probably not going to trade out on the put side because you have to think at some point that's going to balance. Twilio was a nice little bounce play on Friday. They had the great earnings all the way up to 63 and change. If that finds footing here at 57 bucks, I might look for some 60 calls or so to play for a bounce. But they always say, like it's not a Warren Buffett saying, but when there's blood on the streets, that's like the best time. You get a shopping list, get some positions. Maybe you don't load up completely. You don't get 100% position, but I mean, we could drop. I mean, I said we're at May lows. You start looking February, we're at 490 on the SPY. Start of year, we're at 465. Can we get there? I mean, sure. So I don't want to. I always say not getting my bear suit on. At some point, if we start breaking key areas, if we don't close over 515, 516 today, maybe I'll start getting a little more skewed to the downside. But yeah, will be interesting. I'm going to be back on audio later, probably around 10:30, 11 o'clock, just to give a little update. Don't be surprised if I just start to nibble on a couple positions to play for a small bounce. I wouldn't say simply because, but that lower Bollinger Band, and I'll have to go back and look the last time we've opened substantially below that lower Bollinger Band on the SPY. It rarely happens, and I mean, is that jobs report? Was it the most miserable jobs report we saw on Friday? I don't think so, right? And there was backward revisions on all the other jobs reports. So it wasn't like it shouldn't be a huge surprise. I think people use it as an opportunity to take profits. Geopolitical concerns, Japan issues, Warren Buffett selling Apple, and I think you put that all together, and that's some, 85, 90% of the reason we're selling off here. Anyway, I'll be back on audio later. Let's have a great day. Rock and roll.